Greetings from Stockholm. I would first like to thank you for your time to attend this session on central bank digital currencies, and my esteemed guests, Holger Newhouse from the European Central Bank, Peter Osby from Norges Bank, and Vinay Mohan from NZL Limited, representing the Sand Dollar Project. Before we get into more detailed introductions and what each of the panelists' organizations are doing in this area, I would like to give a few opening remarks. My name is John Belisarios. I'm the Global Managing Director looking after digital assets, custody, and central bank digital currencies for Accenture's blockchain and multi-party systems business. I'm leading a number of global CBDC projects, including the engagement with Riksbank, Banque de France, to name but a few. And I've been leading a number of CBDC projects over many years before we even started calling it, using the term CBDC. CBDCs have certainly captured the imaginations of many lately. There aren't a few days that go by without some substantial reference to developments in this area being announced. A white paper here, a position paper there, and an announcement of some country about to or even launching a CBDC. The trend is global in nature, and there's activity in every region on this topic. In the interest of time, I want to bring two sort of key high-level topics to the audience's attention. This is, of course, a much more detailed topic, and of course, there's a lot to be discussed. But I just want to focus on two sort of key topic areas that hopefully we sort of touch upon during the session. This first is whether a CBDC is intended to be used for retail, wholesale, or cross-border applications, or combination of those. This will materially impact the scope of such an initiative and the stakeholders to engage. Naturally, retail deployments are more complex as we have to deal with consumers, and in the end, of course, that takes time and education. The second topic I wanted to mention is whether CBDC would be an account or value or token-based, and how it would be distributed into the wider economy. From a consumer point of view, having the option of holding central bank money in digital bearer form without the need for a commercial bank may be attractive, but the role of a central bank is not necessarily to compete with commercial banks. Conversely, making a CBDC look and behave quite similarly to commercial bank money held in an account of a commercial bank may have limited benefit for the wider economy after all. My esteemed panelists will no doubt have a view on these topics and beyond, given where they are in their journey of implementing CBDCs. I would like to ask the panelists to comment on those if possible. Finally, 2020 saw live implementations of retail CBDCs in jurisdictions such as China, Cambodia, the Bahamas, with many more countries now looking at building prototypes and conducting technical trials. How close are we to pervasive usage of CBDCs? Are CBDCs merely digital replacements of physical cash, or will they enable new capabilities and opportunities? How can we get businesses and people excited about the opportunities that CBDCs will bring? And importantly, how will it change the way we transact? Holger, the ECB paper on the digital euro certainly caught everyone's attention. Can you introduce yourself and your role and what the ECB is up to with regards to CBDC?
Yes, happily so. I trust you can hear me well. And yes, good. So I'm actually the head of market innovation and integration in the Directorate General Market Infrastructure Payment System. So that's the business area that is also looking after the digital euro and is driving the progress on that as part of the euro system. So my division specifically is dealing with that one, but we are also dealing with policy-related questions of stable coins, cross-border payments, also of how the private initiative for payments. We are looking at what is the effective and the efficient infrastructure that we as a Eurosystem should provide and what should be done by the market. And also we are dealing with, for example, harmonization on the securities market side. So a wide range of things, but now focusing on the digital euro. Yes, as you've already mentioned, our report has been published in October. And we also have actually a public consultation running until mid-January, so for 3 months, where for the first time we did it really both for professionals and explicitly also for private individuals, because we think that is actually a topic which touches everyone. Also because of actually what we are understanding as the digital euro, namely that that would be central bank money made available to citizens and firms in digital form for use in payments. So it's we call it retail CBDC. It could also be, I mean, it's also mentioned frequently as general purpose CBDC. So it distinguishes itself from wholesale, and I come back to that. Yeah, so it's complementing. A digital euro would complement, not substitute, cash and also wholesale central bank deposits. It would also have synergies with the industry, and also important, just to be clear on where we are. So far, the euro system has deemed that it's not necessary to issue a digital euro. I mean, you can see it simply by the fact that there has not been a decision, not a project launch to actually implement it. I will explain rather, also what we will actually do. So the main benefits of the digital euro. So there is I just focus on a few points that are in our report, but the active one is that it would support digitalization in the European economy. A second, that is a bit more a responsive benefit, is that it could be actually precisely a response to the declining use of cash as a means of payment. Even though our recent study we published just, I think, last week, also saw that actually cash is still used for most of the payments in the euro area. Then the third benefit is that it could help us tackling sovereignty concerns that we have related. If, for example, there would be private digital means of payments that would be too popular, that would only be used then in the euro area, and also if there was a possible future foreign CBDC, and that would actually be used at a large scale inside the euro area, because it would actually mean an efficient and trusted digital means of payment. So the euro system wants to be prepared for such cases, and that's what we work on. So why is CBDC new for us, or why is it new? To what extent is it new? Because there is already a central bank liability, and that is physical cash. But of course, if you have ever tried to pay for your online purchases, except for a pizza delivery or so, with cash, you find it very difficult. So hence a digital euro. How is it different to central bank deposits that have been there in digital forms already since decades? Well, the central bank deposits that we allow so far are by supervised institution, and hence there's limited access to that. So that would broaden it. And that also distinguishes it, of course, from commercial money. I mean, that's another question that we are facing by the public at large, or by many people. I mean, what's new? I can already pay digitally, yes, but you then pay with actually private money, so a liability on a private entity. And of course, there are also those who confuse it with crypto assets. But I mean, even if something is encrypted, doesn't make it a crypto asset. That for us is really kind of the total difference to central bank liability, because you basically do not have a liability against any identifiable institution. What will be necessary elements for us to look into in more detail? And there I might also mention a few more points then during the discussion later, depending on the questions. But what we have to look is the end user perspective. So if I mentioned the responsive benefits. So in case cash is not used, of course, if we want then that actually there is a choice and people could and would also, without crowding out private solution, actually want to pay with the digital euro, we will have to look at what is the end user perspective. How can it be accessed? How usable is it? So we have to make those choices. We have to answer several other design questions that we also outlined in the report, which are crucial that it would be successful and also safe and efficient means for paying. We still have to work on legal issues. So what is the best way legally to issue the digital euro? We also have to look at the back-end infrastructure, because we do have, of course, some system that could help us strongly. But of course, they have also not been designed for a digital euro as such. So we have to look into those points, including also the front end infrastructure, including, is it us who want to do it? Is it others? How to do it? What is a digital euro? How will the consumers pay with it? And also, how will it be distributed? In the report, what we already do say is that we think it's actually not crowding out, but actually it's a complement to private initiatives. So, I mean, we do not have an ambition, as I said, so to crowd out central bank deposits at large, and also think there is a role for supervised institutions to play as intermediaries for the digital euro. While, and I will probably also mention that a couple of times, while making it always clear that the claim of whoever holds a digital euro is against the central bank. It's a claim on the euro system. We are foreseeing two types of digital euro, so account-based and also a bearer digital euro, at least as options. So they could possibly coexist. So how would it look like? It would look like a modern payment solution for both point of sales and also online payments. It would be made available throughout the entire euro area. It will serve the needs of all segments of the population in a non-discriminatory way. That's also important for us. And it would also aim at curtailing financial exclusion for the unbanked and also for vulnerable groups. We are particularly interested in mindful of privacy, which maybe of course at odds with some other private payment solutions. Well, it would be a more or less risk-free central bank money. I mean, more or less, because of course there's always, you cannot exclude all of the risk, but basically it's risk-free. And it would also be free of charge for basic use by paymees. I did mention that we are in an active listening mode with the public consultation. We also have other outreaches. But also at the same time, we also need to make further assessments, including more conceptual work. We are also running practical experimentation. What will happen then once we have done this, we will, of course, not know everything, but we will know more, so that in mid-2021, the euro system will consider whether to launch a digital euro project. But just to highlight, it would be an investigation phase, not a decision yet to implement. It would basically allow us to come up in a certain period of time with actually a plan and what could be the digital euro, how could it look like, how could it be implemented if and when a policy decision is taken. I think that would suffice, I hope, at this moment for the overview. Happy to add more details later.
Thank you very much, Holger. Very extensive view of what's happening at the ECB. Peter, switching over to the Nordics. The Nordics is very active in the area of CBDC, and I would say a lighthouse for the rest of the world on what, when it comes to digital money and payments, and given what's happening, obviously, in Nordic region as well with in Sweden. Can you please introduce yourself, your role, and what the Norges Bank is up to, as much as permitted, in the area of CBDC?
Thank you very much. My name is Peder Østby. I'm a special advisor in the Payment Analysis and Innovation Unit at Norges Bank, where I work mostly with the new digital money and new digital payment systems. And I'm also in the working group of CBDC that we have in the central bank. And I work with the technical and regulatory issues particularly. So I'm now going to just tell you a little about our project, but first a little background about Norway. In Norway, we have our own currency, Norwegian kroners. We are a European country, but we are not a member of the EU, but we are associated with the EEA agreement. What also characterizes Norway is that we have a very low cash usage, maybe the lowest in the world. About 3 to 4% of retail payments are performed by cash. The rest is mostly with the bank money. Also in Norway, we have a high level of digitalization, both in finance and elsewhere. So we should have a good, how to say, grounds for a CBDC. And we are looking into a retail CBDC, and I'm just going to tell you a little about how we work. We started seriously with our working group in 2016 when we initiated what we now call phase 1, which lasted 1 year, where we kind of looked at CBDC or retail CBDC at a higher level, at the purposes, consequences, possible technologies, and so on. And then we continued in phase 2 in 2018, where we looked further into a purpose of a Norwegian CBDC. We looked at what the necessary and desirable characteristics for a Norwegian CBDC and possible technical solutions. And both phase 1 and phase 2 resulted in public reports that are available at our webpage. And now we are in phase 3, which is about to finish, where we have done more analysis. We have done some sort of proof of concept light or validation, where we have mapped different technical solutions against those characteristics we carved out, and we are also preparing a decision basis for experimental technical testing. And now, within January, we will, in this working group, we will provide a recommendation to the management on how to proceed, and we will recommend probably next stage where we will do further technical testing, further analysis, and where we will start experimental technical testing to learn more about the different technologies and whether they can meet the characteristics we have set up. And then we will also continue the stakeholder dialogue, and it might also be some political engagement in it. It might be that the introduction of CBDC will require legislative changes. So just little about how we work. To summarize it, our kind of superior or overarching purpose is given in the Central Bank Act, and that's kind of where we start when we look at CBDC. We have the traditional purposes of a central bank. We are to promote price stability, promote financial stability, and to promote a secure and efficient payment system. And when we started our inquiry into CBDC, we kind of looked at it most as a means to promote a secure and efficient payment system, but and not impede other goals. But now we have seen that it might also serve as a tool to serve other goals. When it comes to the purpose of CBDC in Norway, we have identified a few things. We think the contingency aspect is important. We think the competition aspect is important to promote competition to bank money, not to carve or crowd out the private solution, but to be some discipline on the market solutions. And we have also looked carefully into what we identify as the precautionary principle. There are a lot of developments in the payment system and monetary systems, and we think it's precautionary to look into CBDC as a possible means to face those challenges that might come in the future. It might be new private money, it might be infrastructure that's moved abroad that will give us some less discretion in the national governance and control. And from these purposes, we identified many necessary and desirable characteristics that we think Norwegian retail CBDC should have. I don't have the time to go through all of them, but they are available in the report. And then we have looked at the technical implementation. And what we have particularly looked at is a token-based solution and sort of closed account type system. So that was a little about our work, and I'm happy to elaborate on it during our discussion. Thank you.
Thank you, Peter. Last but definitely not least, Vinay, Sand Dollar is an extremely exciting CBDC initiative and up there in world firsts. Can you please introduce yourself, your role, and tell us a little bit more about the Sand Dollar?
Sure thing. Hi, John, and hello to everyone who's dialed in. My name is Vinay Mohan. I am the Chief Operating Officer of NZIA, and I've sort of been part of the CBDC space thanks largely to the emergence of enterprise blockchain. And having lived in Singapore for the last 5 years, every year would be punctuated by the Singapore FinTech Festival. And I know you know this, John. You know, the MAS, which has sort of led so much in this space, would publish something significant every year as part of the FinTech Festival. So having been part of the early stage experiments with Ubin, having helped Ubin evangelize its features in South Africa, and that became Project Coca. I've been fortunate to be a part of this space for some time now. My background is in management consulting primarily, but I found myself in enterprise blockchain and now with CBDC. So sometime at the beginning of this year, I joined a very enterprising set of people, friends of mine, who have a history with all sorts of money systems. So our team is a very diverse team from the very diverse world of money, having worked in cryptocurrencies and stable coins and mobile money and e-money, and with substantial amount of efforts coming in towards their final days as entrepreneurs before NZIA in Africa. So a lot of our philosophy, a lot of our ethos is about enabling money at the grassroots level. We subscribe to the ideal that money is a public good, and accessibility to money should come without discrimination to those who need it the most. And in that sense, we have a lot of our philosophical roots in Africa, and that's where we get the name from. So lots of people ask me, what's with the name? Funny 4-letter acronym NZIA. What is that? So NZIA is actually a derivative from the Swahili word for pathway or journey. It comes from NGO, and that's sort of our pole star in terms of what we stand for, in terms of providing money as a financial public good to anyone, anytime, anywhere. And our claim to fame, as you mentioned, John, is we were selected from a open bidding process by the Central Bank of Bahamas 18 months ago to implement the Sand Dollar initiative. The Sand Dollar initiative, the claim to fame for that initiative is that in October of this year, it went live as the world's first retail token-based CBDC in production, which means actual money on the balance sheet, actual people using it, actual agents on the ground helping with its issuance and distribution, and a fully functioning ecosystem that is completely protected by law. And in doing so, it deals with legal tender, not just electronic money, but digitally native money issued by the central bank. So that's what we've been working on so far. And our company we're essentially a technology company, and we have a long tail of offerings in the CBDC space with an extreme amount of focus in taking Sand Dollar through its various iterations. So I'm happy to sort of throw more light on what we've been doing as part of Sand Dollar, but you'll excuse me if I don't go into too much detail, as I can't represent the Central Bank of the Bahamas, but more than happy to share perspectives and learnings from that project. And maybe just to round up what we've been doing then, some of the core elements of that project. We often talk about CBDC as if it's this one unified global phenomenon, but the truth is it's not. It's extremely different. Just the way, as I suppose, we talk about the global financial system as this one living, breathing, connected organism, and it's not. It's extremely fragmented in its ideology, and so too I think with CBDC, and that is for me quite central to the premise of how CBDCs become usable at a day-to-day level, because it has to be seen in the sovereign socioeconomic sphere in which it is conceived. So a CBDC in the Bahamas is going to look quite different from a CBDC in Cambodia and from China and from the Nordic nations and so on. So that's a fundamental view that I hold. And having said that, in the Bahamas, lots of countries are doing CBDC today. Lots of white papers are being written. The Bahamas had been on a payment systems modernization initiative for a long time, for many, many years. And CBDC was really the icing on the cake. It was the culmination of a number of years of research and investment in modernizing the national payment system, and a lot of the plumbing that went into connecting the 700 islands that make up the archipelagic nation of the Bahamas with state-issued money. And so I say that because it wasn't a project that came about because CBDC was fancy or it's the next best thing or let's get on the bandwagon. This sort of an initiative was a necessity, and it's a necessity when you're an island nation with a population of 400,000 people, and you are pretty much in the middle of a hurricane zone. So every year the Bahamas gets battered by all sorts of natural disasters, and it's a fragile geography. It's hard for people to access, day-to-day services, leave alone money. So if you're late, or if you're hit by a hurricane, or if you just didn't start your day right, you literally miss the boat. And if you do that, you have no access to the nearest islands where the ATMs are based or where the banks are based. So it's this vicious cycle where the lack of physical infrastructure and the lack of a cohesive sort of resilient network of infrastructure, coupled with the fact that it's an island nation and people are so dependent on cash, it's a vicious cycle which starts off the need for more cash, and then you have problems that come out with the use of cash. And not to mention the Bahamas doesn't particularly enjoy a very strong status as far as compliance in the eyes of the OECD is concerned. They've unfortunately just been in and out of the grey list these past few years. And that makes it all the more difficult on people at the grassroots level. So we've seen firsthand how this impacts people. We've seen firsthand how the lack of access to physical infrastructure when the mobile broadband towers go down, or when you have a loss in signal, or you haven't got connectivity, it straight away affects everything from your ability to pay for your coffee to actually do some sort of major commercial transaction. So this is the harsh reality of the backdrop in which the Sand Dollar project was conceived. So when we talk about CBDC, there are CBDCs and there are CBDCs, and this one really comes from the grassroots level where money was recognized as being a sovereign right. Inclusion was a real motivator. Driving out cash, not so much. Sand Dollar is not meant to be a replacement for cash. It's supposed to be a complement, and it's very much in the retail closed loop sphere of things. So this is not the Bahamas trying to say that we're going to have a stablecoin based initiative that will dominate the entire region. This is very much legal tender. It's digital fiat currency issued by the government. Happy to go into more details, but obviously, NZ has been building the end-to-end infrastructure to make this happen.
Vinay, you certainly got a couple of questions in my head, and I wouldn't mind asking them in terms of this initiative. What would you say are, having implemented this and rolling it out and so on, what would you say are some of the things that you didn't expect to see, or maybe lessons learned, or some surprises that you had in the rollout of this very forward-looking implementation in the Bahamas?
Sure, yeah, happy to take that. Yeah, lots of revelations, lots of lessons learned, and things that we can look back to and wish we had in hindsight. The first thing that we didn't have in terms of any sort of luxury was the lack of a playbook. And because if you subscribe to the view as I do that CBDCs are not all unique and they're not all sort of cut from the same cloth, and different CBDCs have different applications and hence different features. There is no central playbook in the world today. I know we're probably getting there with a lot of the good work that's coming out of the ECB and the BIS and other institutions. But when Sand Dollar was kicked off, there was no playbook that taught us how to go about implementing such a venture. So from day one, you're constantly fighting against a whole lot of unknowns, not just in terms of technology design, but also simple things like how do you engage grassroots stakeholders. What's the right kind of ecosystem to build? What's the critical mass required? So lots of groping in the dark, lots of hits and misses, but thankfully nothing that stops that project from becoming successful and meeting its goals in the time defined. Adding to that, I would say that the lack of any sort of backup physical infrastructure was a real problem. So one of the mandates that we had as part of Sand Dollar was to ensure that there was resiliency in the network to enable what is called, this is what I call the holy grail of the CBDC world. It's something that is commonly known as the offline mode. So lots of central banks are looking into this, and the Bahamas was very particular that offline is part of the design mandate, because this is a real problem. People not having access to electronic services means there's no point in electronifying money if you haven't got basic physical access. So we had to come up with innovative ways to build resiliency into the network. We've done so. We've built the world's first what we like to call CBDC Wi-Fi. It's a combination of different telecommunication networks that will kick in the moment your traditional networks go offline, and it allows regular users to use money, and the flow of money sort of continues unabated. We're also working on other universal access device mechanisms and other ways to sort of solve the offline problem. But this was something which was new. It was a first for us, and we had to get that quickly into the bag. And if I can just round that off by saying, probably the hardest thing about a project like this, and I suppose any consumer-facing project which has been driven by the government, is the creation of a support ecosystem. We had to work with a number of authorized financial institutions. There's about 7 or 8 of them that have been identified right now by the central bank. But we had to come up with a design of not just the base CBDC in its tokenized form, but also the design of the platform, the way in which the issuance, the minting issuance and drawdown cycles would work for the intermediaries in question. Because as you may probably know, one of the principles was that the central bank of the Bahamas did not want to disrupt. And I know we're going to talk about account token base, but the central bank did not want to disrupt the existing financial system, and it did not believe that disintermediation was necessarily a solution. So we had to work with players who were on the ground, who had existing networks, to make sure that ongoing infrastructure efforts wasn't disrupted. And this ecosystem is something that we could take along with us as we go ahead. It's a very fragile ecosystem, and you have to be very careful in how you approach them. So yeah, lots of little lessons learned that we wish we had known before, but yeah.
That's part of the learning process, right? At the end, and being first sometimes is always a challenge. I have a question for all of the panelists today. So, and I make a particular reference maybe to the digital euro paper that was published a short while ago about sort of consumers or users from outside of the jurisdiction, either resident or citizens of another jurisdiction holding CBDC of another country, for instance. Do you believe that we will see CBDCs held by consumers in other countries and traveling with a digital wallet to make payments when abroad? I think for the European area, I would include EEA and Eurosystem and EU and all of that. But also, given the fact that Bahamas already has the sand dollar, do we see a world, do we envisage a world where we will be able to have digital money in our digital wallets and being able to travel with it and using it across different jurisdictions like we do with banknotes today? And I'll open that up to anybody who wants to take that question.
Yeah, I can go first on this one. Yeah, of course. That is. You're touching upon an important point that actually is still for us also open of exactly how to do it. Because it's very clear that for somebody coming from out of the currency area, in however it is exactly defined, but coming to your country wanting to pay. So I think it's most obvious that actually they would be able to also pay with the central bank digital currency of that country. So that I think is it's something that one wants to support. So, and that they have kind of some change left when they leave the country, also fine. So the problem starts, usage would be large outside the country. How would it be used there? Because that has then many implications for if it's a big store value, capital flows. There are relative remuneration questions. That's where it becomes difficult, and that's where we will have to think of how to limit it, whether with hard limits, whether with incentive schemes or whatever. So that is a crucial thing. Another possibility is actually that one, however, uses also the central bank digital currencies of the different areas and makes it more efficient to exchange it so that one can actually make the payment in that country and use it there, but does not have to basically have it to a large extent abroad, so to say. So that's the first point from my side.
Thank you, Holger. Peter, thoughts from your end?
Yes. When it comes to the Norwegian kroners, it's a question how attractive that is abroad and so on. But putting that issue aside, our clear, as with the EU, our purpose is domestic use, both by residents and possible also visitors, tourists, and temporarily visitors and so on. So we think it's important to have a system that allows for that, to also foreigners to use it. And then it's a question arises if they sort of bring this abroad, or they start to settle with the Norwegian kroners abroad, which is not the purpose and might be also, against the purpose if it's used too much. So the kind of, from a technical and a regulatory side, the question is for us how we can control it without sort of impeding other benefits of CBDC. For instance, we have been thinking about, for instance, a token-based CBDC could be useful if it's interoperable with other platforms, for instance, DLT platforms, to be used for, payment services used by other platforms. And then the question is how we can, remain the control over the use, given that we want that. And then we must look into that both from a technical side and to what degree can we limit or control the use technically, and also regulatory, because different uses might create responsibilities or reputational risks for the central bank. So we think this is an important issue with sort of trade-offs have to be made, and it's important to do the correct trade-offs.
Vinay, from your perspective, given that you've already implemented the sand dollar, do you envisage sort of usage by others that are either tourists and coming to visit, or people taking the change back home with them and using the wallets, outside of the jurisdiction? Is that something that is, conceived as a possibility for the sand dollar?
Yes. So the first part of what you said is a conceived feature and very much a necessity. The Bahamas, for example, has more than half of its GDP coming in from tourism. So for a tourist to come in and to purchase sand dollar at the point of entry, and it helps, of course, that the Bahamian dollar is a one-to-one peg with the US dollar, and a lot of the tourists actually come from the US, the nearest sort of major nation. So that is something that is on the cards and can be done, and will likely soon be done. I can't speculate as to the timing, but that is very much on the cards, because of our philosophy that sand dollar has to be digitally native, and and the overarching principle that money should be truly a sort of value for the individual who has ownership over it. It is possible for a tourist today to take back their Sand Dollar in an attested whitelisted wallet on their cell phones back home. What they can't do, of course, is spend that money over there, wherever they take it to, because the supporting ecosystem will not be available. Now, and that's the second part of your question: can a tourist who has Sand Dollar, change on their phones, take it back home and spend it, even if it's pegged to the US dollar? The answer today is no. And for the same reasons as the other speakers mentioned, there's a number of not just technological, but legal, regulatory, and policy agreements that must first be in place. And a lot of groundwork has to be done as far as this level of interoperability is concerned. The technology certainly allows for it. The technology is not the limiting feature here, but the prime motivation is to have a retail complement for cash, and that's the first major sort of use case to be fulfilled. But hopefully, with Sand Dollar going live, and you have projects with the Eastern Caribbean Central Bank, and that's going to go live very soon. The Bank of Jamaica has indicated interest in this space. The CARICOM region might just come alive, and with what projects like Ubin have done for ASEAN, we might see a regional block where these CBDCs might become interoperable very soon.
Thank you. I have a couple of questions regarding sort of some of the biggest hurdles. I know that Holger, you mentioned quite a bit of them actually, but I would just like to ask the other panelists as well. What would you say are some of the biggest hurdles that we will have to overcome to successfully implement a general purpose CBDC? I know, Holger, please feel free to elaborate even further if you wanted to as well. Anyone can take that. All at the same time.
Please.
Peter, go, please go.
Okay, thank you. Well, often when we kind of look into CBDC, we kind of have the worry that it's too much used and it will, crowd out banks and the financing of banks. But the real problem might also be the opposite, that it's used to a small extent, and that we don't achieve the necessary network for to be used. So we are thinking, at least in our sort of design characteristics, that there should be some niche solutions for CBDC, so that it's attractive for a sufficient amount of people to hold it and use it. It might be some government payments or government uses, I don't know, but for us, it's important, in particular, to achieve our purpose of it to be a contingency solution, that a sufficient amount actually holds it and can use it in that situation. So this is something we think carefully about, what kind of niche solutions that can be adequate for CBDC to gain the sufficient network.
Vinay, maybe over to you. Any thoughts?
Sorry, John, I'm going to have to ask you to please rephrase that question so I can answer it in the right essence of
right. So what would you? Yeah. So what would you say are the biggest hurdles we'll have to overcome to successfully implement a general purpose CBDC?
I guess the real race is not so much who launches the first CBDC or who's got the prettiest looking tokens out there, but it's really about adoption on the ground. And if the mandate is to create a complement for cash and accessibility for all, and making sure that the banking or the unbanked have some kind of access to the funds that they own, which they keep under their mattress, ground level adoption is going to be a major challenge. And this is something that is an ongoing problem. It's not unique to any one CBDC project, or for that matter, any one consumer technology project or innovation project. It's very hard to convince people to start coming on board systems that actually work in their favor. It's a difficult chasm to cross, but once you cross it, it becomes a lot more easy. And we saw this firsthand when we were working with vendors in street markets in the Bahamas. And these people would, traditionally struggle with long credit card processing cycles and all sorts of working capital issues. And suddenly their eyes lit up when they saw that they had money on their phone in literally less than a half a second of my sending it to them. And that just completely changes the way people respond. But getting to that point where you can make that contact is very hard. And that can't be done by an external agency like a technology vendor. It probably shouldn't even be done by the central bank, right? It's not the right way to go, because this is the regulator. It's a very different kind of agency, and this is why the presence of a live ecosystem on the ground is so important. You need that network. You need your financial intermediaries to operate on your behalf. The people who actually help create wealth once the money has been printed, they're the ones who can do this this really well. So enabling the ecosystem to ensure adoption is, for me, the number one challenge with CBDC, especially with island economies, especially with economies that don't have huge proliferation of payment systems, like in Singapore, for example.
Thank you, Vinay. Holger?
Yeah, I mean, maybe really to be complementary to what the colleagues have just said is, I mean, there's also organizational challenges that one has. They are not totally unique, but I think that the size of this, also of the public attention on the digital euro, is so much larger than for many other things. So it's how to bring the expertise from within the central bank and also from the private sector actually together, because for some things it actually is pushing certainly our technological limits, for example, of what we're doing, because it's really at the frontier. And to do that actually while being kind of neutral, safe, also from a kind of, I mean, getting that expertise now without already committing of who will be a supplier, for example, how to do this. So this is an organizational challenge. It's also is an issue of that I worked in policy implementation for many years, but there we were preparing in secret. Now we have to and want to manage stakeholders' concerns, want to make them comfortable. Like the example with merchants who all of a sudden are happy that there's something, but you may need to make them comfortable. So you have to talk about this while making progress at the same time. So that's also a challenge. But then there are the content ones, and in our case is also that there is not only the trade-off between, for example, cash and CBDC, in our case, the digital euro, but it's also with private solutions. So indeed, how to calibrate it? It has to be attractive enough to be used. It should not be a huge store of values so that all assets are sold and everybody just wants to hold the digital euro. So how to make it user-friendly enough? And there are several things also where I could elaborate more on the cash and CBDC rather than cash versus CBDC, if that is wanted.
Thank you. A couple more questions. Yeah, sorry, go ahead.
Can I just add one point
Yeah,
to this issue? Because we, in our characteristics, we have said that we want the customer control and communication to be performed by third parties. And we think third parties would be very important to make this attractive. It might be banks, payment service providers, and so on. So we think that what is necessary is that CBDC, that the technical infrastructure is kind of compatible with the payment solutions that the customer usually use. It might be the usual, wallets or so on. So it can easily be integrated with those. But what we also think as a kind of challenge in that respect is that that the CBDC should not be dependent on those wallets. So it should be easily to kind of move, or if you have CBDC and you use one wallet, it should be easy to just switch and use another wallet if this wallet is not working or if you don't want to use it anymore. And then it's a question how attractive it will be, for those third parties to kind of have some means of payments where the switching cost is low, So this is some issue we really need to think carefully about, what kind of additional services third parties should be able to build on top and so on, to kind of create their own network externalities, but still that the customers are not too much locked into CBDC. Thank you.
Thank you, Peter. I have a couple more questions and 10 more minutes left in the session, so I wouldn't mind sort of asking each of you. So far, our conversations have been gravitating around sort of the retail topic, and of course, we've touched upon cross-border and movements and so on. But what would you say is the strongest case for CBDC? Is it really retail? Is it wholesale applications of CBDC? Cross-border? Could you elaborate? And I know the focus has been primarily on the retail side in this discussion, but are there other use cases that may be even stronger than retail? And I'll start maybe with Vinay, and we'll go down the list.
Sure. So I have to go back to my original point that I made about seeing CBDC in the sovereign socioeconomic context. And it's going to be very hard to paint a generalist picture as to what CBDCs are meant to do, because what they're meant to do in the Bahamas is perhaps not what they're meant to do in Singapore. And which is probably why it makes more sense to talk about maybe wholesale CBDCs in advanced markets like Singapore, where money systems are engineered to the max, and you have at least half a dozen different ways to pay somebody if you want to. But you take that aside and you look at an island economy that's constantly battered by hurricanes, which is facing a lot of financial crime regulation, and it's hard to come by. GDP is hard to come by. So it's a different kettle of fish in the Bahamas, at least, because retail CBDC is a non-trivial problem. Putting money in the hands of people is not something that's very easy. And I think crossing that bridge, I think, is one of the biggest things that we can do for that nation, at least in terms of payment systems modernization. Now, that said, it doesn't mean that it's the only thing that can be done. Obviously, and there's a very good playbook for this. Ubin has shown us for 5 years now that you can build use case upon use case, multiple layers that add to the sophistication of your CBDC ecosystem. We are already seeing a number of the authorized financial institutions that are responsible for managing the distribution layer of the CBDC in the Bahamas. We're already seeing many of them getting in on the action as far as downstream use cases are concerned. So people are talking about using the fan dollar for all sorts of new payment products, new financial services, possibly even security settlement in the future. So there's downstream possibilities that are definitely opening up. But I have to say, if you were to ask what is the most important focus or the primary use case, in the context of the sovereignty and the socioeconomic nature of an island economy like the Bahamas, I would say that retail CBDC is extremely important, because that's when it's at that level which everything else begins. Today, we can take a lot of this, advanced digital commerce for granted in countries like Singapore or in Scandinavia or the UK, because for a long time we've not had this problem of how money can be, in the hands of the common people. That's a very real problem in many other places in the world.
Thank you, Vinay. Peter?
Yes, thank you. I think from our side, it's the kind of strongest point to some extent, at least, is contingency and the ability of for offline solutions and so on, which is important, but which is kind of maybe not what most people think about when it's not needed. So it's kind of not so attractive feature, to gain traction. Yeah. But we have also seen that it's in some cases that certain actors, they are concerned with things like settlement risk and credit risks and so on. And we have also seen some incidents where it could be useful to have money integrated in other public registers, for instance. So you can have the delivery and payment, delivery versus payment in public registers, for instance, for shares and so on. This is not our primary purpose, since we are looking into a retail CBDC, but it might at least be some demand there.
Okay, thank you, Peter. Holger?
Yes, on my side. So basically, I think the question is quote unquote unfair, because actually both wholesale CBDC and also for retail purposes, both are important. But our revealed preferences are that because on the wholesale side, actually, supervised institution can settle in central bank money, being securities or making payments. That's available. So the biggest gap is on the retail side. So that's why we focus on that, because even if at this moment an instant payment, banks can actually make that using central bank money, but for the customer, because they use their bank account and the one who gets the money will also get it on the bank account, it's in private money. They don't have access to central bank money. And that's why we focus on the retail side.
Thank you very much. And on that note, I would like to thank you all for taking the time today for this very interesting and enlightening panel. And I look forward to actually seeing you maybe in Singapore next year. Thank you very much. Thanks for your time.
Okay. Thank you. Bye.
Thank you.
Thank you.
Thanks, everyone.
Bye-bye.
Thank you.
Bye-bye.
Thank you. Bye-bye.